Good morning, good afternoon, good evening to all. Today, what we are going to discuss is about the gold prices. How the gold prices are affected. What are the various factors which affect the gold prices? Without further ado, let's just begin. So, the first factor affecting the gold prices is the demand and supply. Let's say we take any commodity. The price of any commodity is a simple function of demand and supply. If the demand of that commodity, in our case gold, is more, then the price of that commodity, in our case gold, will increase. And if the supply of gold is more, then the gold prices will decrease. It's a simple economics. Now, the next thing we have to see is how the demand is generated in the gold market. Jewelry demand is not the only demand. Well, there are so many factors which come into the play when we talk about gold. So many global factors actually. I can say that US, India, and China are definitely the major consumers of the gold, but then are several other countries which use gold as for different purposes, which we will discuss in the coming slides. So, global gold rates act as a benchmark for the setting price of the gold in Indian markets. As I said, India is not the only country which decides the price of the gold. Price of the gold is decided by the world. How much is the demand and how much is the supply? And let me tell you, the demand for the gold is way more than the supply. Since we have depleted all the upper layers of the gold, now we have to dig more to extract the more gold. And as I said, as you can see in the presentation, there the gold is used in various other medical devices and in various technological instruments. So there are several other factors. Now, another factor which affects the gold price is the uncertainty in the market. Let's say there's geopolitical tensions between various countries, in these days between US, China, and India, China. If there's uncertainty in the market, like people don't know what's going to happen, the gold prices increase. People tend to buy more gold because gold is a commodity which can be traded anywhere in the world. And let's say there are trade wars. Even when there are trade wars, gold prices increases. And another situation, let me tell you, very important one, when there's COVID-19. I mean, as you can see, because there's so much uncertainty in the market, you don't know when it is going to end. So the gold prices have increased drastically. Gold is considered as a safe haven. As I said, like it can be traded anywhere in the world. Even if the value of the cash decreases, but the gold, since because it's so much in the demand, and it is recognizable anywhere in the world. Another thing which affects the gold prices are the interest rates. Now we're talking not only about the Indian interest rates, we are talking about the major banks interest rates like Bank of Japan, US Fed, the ECB of Europe, and then their policies. If they come up with a policy that they say that they are going to decrease the rates, then the opportunity cost to normal people like you and me decreases. You don't want to put your money in the bank. You would want to invest the money. That's why I pulled up the chart here. It's a historic chart. Like whenever the interest rates have gone down, the price of the gold has increased. Let's just consider here. The real interest rates are falling and the gold price is increasing. It happens every time. So it's a historical thing. Like whenever the interest rates go down, people tend to buy more gold because they consider, as I said, like it's a safe haven asset. Next thing which affects the gold prices is US dollar. There's a negative correlation between the value of the US dollar and the gold prices. Whenever there's an increase in the value of the US dollar, the gold prices tend to decrease. Since the value of the dollar is decreasing, people tend to buy more gold. Banks try to store more gold instead of storing the currency, because the value of the gold, they know it's precious and it will increase. So whenever the value of the US dollar falls down, banks, major banks like Morgan Stanley and all other banks, try to put more gold in their deposits. Now, gold, as I said, is definitely a safe haven, but it is also used as a hedge against the inflation. Whenever there's inflation, people buy more gold because the value of the currencies goes down, and same way, whenever the value of the US dollar goes down, the gold prices increases. People tend to buy, banks tend to buy more gold. Now let's talk about India. As you know, India is one of the major consumers of the gold in the whole world. So out of those whole population of India, 60% of the gold in India is consumed by the rural demand. So whenever there's a good monsoon in India, India tends to buy more gold. Whenever the farmer has money, they don't want to put their money in their bank accounts, or they don't want to keep the cash. Instead, they will just invest in gold because they know, I mean, they have this thinking, which is probably true, that gold always goes up. Gold prices always go up, and which is a good thing. And you know, like whenever there is money in the hand, good monsoon means good economy, and good economy means Indian men making their wives happy by buying gold. Now let's talk about some interesting facts. Uh, 3 years back, Warren Buffett was not a big fan of gold investments. He said like, instead of putting your money in gold, you should buy stocks, which is like more good investment. But the times have changed. Warren Buffett has increased its stake in the gold ETF. He has bought so many shares of gold ETF. So you can see like gold is so in right now that people, even Warren Buffett, wants to invest in the gold because he knows that gold is a good asset, safe haven, hedge against inflation, currency is decreasing. So he probably thinks that gold will definitely rise. Now, US dollar, Indian rupees, euro, pound, they are definitely other currencies, but gold is also considered as a currency. And because the other currencies are decreasing, the gold, since it's a rarity, like there's a limited supply, the value of the gold is increasing. Now you may want to ask like, should I just buy the physical gold? Is that the only option? No. You can definitely, bullions and jewelry are the most common way of investing in gold, but these are not the only options. You can invest in gold bonds, which India's recently, launched it few years back, the SGB sovereign gold bonds, and you can also invest in gold ETFs, which is available normally in the our in the broker system. But another thing, like if I'm personally, like, I invest in the gold companies as well, the companies which give gold loans, like Muthoot Finance and Manapur Finance. So these companies, I have noticed like the prices of these companies increases with the price of the gold, which is definitely true. If the gold prices increases, like, these companies tend to do well, and people tend to buy more loans. They get more value out of the gold. So that's it for today. Thank you so much. If you liked my presentation, if there's anything, you can comment below, and please do subscribe my channel and give me a follow on Instagram. If you have any questions, feel free to contact me. Thank you so much.